Well, I'm very pleased to introduce you to Battery Mineral Resources. We are a battery minerals focused junior mining company and in the development space, and I'm Martin Kostwick, CEO and a director. And I'd like to allow you to give me the time to give you an introduction to the company, and from my point of view as an executive of the company and also a shareholder, why you would consider investing in Battery Mineral Resources.
Martin, hello and welcome to London. But you're just about to disappear, so how was the conference?
It's been great. We've been very active. We've met a lot of new people and some people that we've seen before, so it's been very good that way.
Are you kind of finding it's better meeting people face to face or having 2 years of Zoom calls and so forth?
Oh yeah, of course. Yeah. The interaction like we're doing right now, it's where we need to be.
Yeah. So, and what sort of people were there at the conference? I mean, are you after institutional, or is it a little bit more European retail?
Well, we've seen a mixture of everything, from institutional to a little bit retail, and quite honestly, several private investors that have an interest in us. So we're quite pleased to talk to everybody.
Okay.
And we have a great story. So.
Yes, we spoke before, and we'll reference that in a link below this video. People should go and see that, giving them the kind of backstory to this, because it's a small company, but there's a bunch of portfolio assets that you've got. We're focused on Chile, and that's what I want to talk to you about today. So since we spoke in February, you've been drawing down on that convertible. So you've got the money to do what you want to do, have you?
We do. The convertible, let me back up. I mean, we've been a public company for a little over a year now, and we've brought $27 million into the company over that time, and every bit of that money has gone towards our projects. The main focus is our recently acquired copper mine in Chile. Now, this is a former producing copper mine. And back to your point about the convertible, we were able to secure a $10 million convertible note, and the majority of that is going towards what I would say the development of that project, because that's the launching point of the company, and that gives us a nice start to the full financing, which is required to get it into production.
Well, talk to me remind me again why you went down the converter. Because 8% coupon on that, is that deferred in any way, and what are the other terms?
Well, it's a three-year note, and what it does is it gives us the ability to bring cash into the company on very good terms for us.
Right.
And it allows us to sort of defer that probable but not definite dilution in the future, because it could be paid with cash or shares.
Right. Okay. But you also do need to raise a little bit more money to kind of get this thing up and running. So maybe before we leap into that, I should start with, what have you been up to since we spoke with regards to moving Chile forward?
We've been very, very active down there from the very start. We acquired the project at the asset level. We closed the deal back in May of last year, and it was a $12 million best ever private placement. And almost immediately, we were able to put a team together and go in there and start developing the project. The majority of the money has been spent on a drilling program, which we've just concluded. I would call it phase 1 of our drilling program, which was around 33,000 meters. But we've been doing engineering, we do metallurgical testing, modifying our existing permits.
Sure. What was
a lot of fronts.
Former producing.
Yeah.
What was this drilling doing? Was it a little bit of infill and a little bit of expansion?
It was a combination of both. We went into the project with sort of eyes wide open, peel back the layers, look for the opportunities, the risks, and one of the things that we immediately understood about the project is that we needed to come out and hit the drilling really hard, because the last two operators didn't necessarily spend a lot of money on drilling, especially the prior operator, because their misfortune was our fortune, because they came in, they bought the operation from Glencore while it was operating, and almost immediately found themselves in trouble because they were in a declining copper market. And of course, if you're an operator and you're limited with cash, they simply didn't do any drilling. So we came in, we understood that we had to come, we had this great asset with all the hard assets that are there. Glencore invested in this thing and operated it for over 8 years. One of the things that was missing was some drilling. So that's exactly what we did,
Right.
and that was the main focus.
And what's that informing you of that's going to allow you to most efficiently get this thing up and running, or plan how you get it up
Yeah,
and
that's a
running?
good question. When we acquired the assets of the mine, we had a choice to do one of two things. One would be to raise money and drill,
Yeah.
study,
Yeah.
or raise money and drill and get a critical mass of tons put together and enough such that we could make a decision to go into production.
Right.
And that's the path we took.
That's interesting. We're seeing a few companies do that more and
Yeah.
more, which is sort of not the usual North American model. Get some cash flowing, it's anti-dilutory. And we spoke last time. You said, right, this is good grades, right? Good grades. It's not a big project, but it shows a kind of route to market, and maybe there's other projects like this that could be snaffled up in the district, right?
You're absolutely right.
Right.
This is the launching point for us as a company that's just come to the market, and with the clear vision of becoming a cash flowing entity. This is a nice bite-sized way to get into that form of business.
Right.
That's really what it is.
But first of all, got to get this one over the line, right?
Yeah.
So, as I referenced earlier, you obviously drawn down the convertible, done a bit of activity, but you're going to need to raise a chunk more money.
Sure.
What type of money will this be the next round? Who from?
Yeah, that's, I think that's one of the biggest things people are waiting for in terms of how are we going to fund this into production. As you said, we just closed a $10 million convertible. Much of that money is going towards allocating to what I would call the restart capital for the mine. But our focus, and part of the reason why we did this convertible is our focus really is to be non-dilutive as much as we can. And we're looking at various non-dilutive measures that would bring capital into the company. We're currently talking to traders in terms of prepays for offtake. We're looking into the private debt markets, and we're also have interest from royalty companies. So we feel like one of those three, or a combination of a couple of them, will bring us over the line. We currently have about half of the restart capital that we're looking for very close at hand. So we're looking to close the gap with one of those other three options.
What do you mean close at hand? What does that mean?
Well, close at hand for us, we're a brand new company, and we're a small company. We're a little bit convoluted because we actually have an operating entity within our company. It's a company that we brought into BMR as a part of the RTO process when we became public about a year ago. And this operating entity is called ESI, Energy Services Incorporated. It generates cash.
How much?
It's an operating business, about $5 million in EBITDA a year.
Okay.
It has
actual cash, free cash flow, as in stuff that you can get. Yeah.
Well, I'll give you an example. We've drilled about 33,000 meters, and they pretty much funded that entire program for us.
Okay.
In terms of the cash that they're generating. So they are a source of cash. It's a great business. I really enjoy working with the group that runs the business in terms of looking for ways to improve it and grow the business. And so, so not only does it provide cash to our company, which is part of our restart capital in the future here, but they have various assets that we're looking to monetize, and that's what I mean close at hand. There's some real estate that we're looking at selling, and in fact, in one case, we're looking at a sale leaseback for a chunk of real estate that they have. So they have a lot of various value that they could bring into the company and keep our financing non-dilutive.
Right.
Yeah,
because you also got some other portfolio companies. You've got the graphite over.
we do.
Right. Okay. Was it Asia somewhere?
In South Korea.
Got it.
Yeah.
Right. Okay.
The best place to have graphite, by the way. Right?
Okay. Let's go with that. The battery manufacturers everywhere. Yep.
Yeah.
Ontario. You've got Idaho.
And Nevada.
And Nevada.
Yeah.
Right.
And then, of course, Chile.
And of course, Chile. So we talked last time. You said offloading some of those probably isn't what you want to be doing.
Yeah, look,
But is it a possibility now?
it is a possibility. We have interest from various groups that would like to entertain the thought of doing a joint venture or completely acquiring some of our non-active assets. And I say non-active because our focus right now is, we have our eyes on the goal, which is putting Punitaki back into cash flowing. And hence, we're not paying a lot of attention. We're maintaining and we own these other assets, but we're not developing them. And they have a lot of potential to bring value to the company, whether we develop them ourselves or we go and partner with someone.
So it's not, they're not on the table.
Correct.
Okay.
Yeah.
Back to Punitaki, right? Whatever that money looks like, and you'll tell us if, how, when you get that in place in some shape or form. What's the time? Remind me of the time frame for getting to production, because I think you said about 12 months, but there's a ramp up. And when do we reach optimum output?
Well, those are all things that people are very interested in understanding, and it's pretty simple. We've been telling everybody, our investors, our future investors, that we would like to be putting new tons through the mill and producing copper by the end of the year. Right. If you work backwards from that to now, we need to start allocating capital towards that effort pretty soon.
Right.
And job one is mine development and getting things organized to establish enough ore faces to have a sustainable supply, regular supply of ore to the mill. So we're heading towards that, and things are coming very soon.
What incremental amount of cash is needed to put you in a position to do that? We
are looking right now at a overall initial capital, which I would call, when I say initial capital, so everybody understands, it's really what we need to spend from now until the time that we're completely cash positive. We become a self-basting turkey. We can supply cash to ourselves. So that initial capital is anywhere from $23 to $25 million. That includes working capital. And we're refining that number as things change in the marketplace and whatnot, but it's around that. And like I said, we have about half of that close at hand, and we're looking to fill the gap with those three means that I was talking about. Okay, and then because it's former producing, there's a lot of historic data which you've been utilizing and analyzing and adding to your own data too. But with regards to, you mentioned MET work happening, studies, etc. So in terms of that process, funded to be able to do that, great. When do you expect to be able to actually share some of that with the marketplace? Some of the results from all the studies and everything. Well, that's going to start coming out because these things take a while, and we've been at it since about August of last year. So, we're going to start having a lot of news that we can share with the public, with our investors regarding our metallurgical test work results. Our drilling results we've been sharing all along the way, which have been very positive. We'd love to update everybody on our efforts for permitting. We've got a number of things going on along those fronts. And so good news is coming very quickly, and it seems to all be coming sort of all at once. These things take a while, and they all seem to be coming together right now. Right. But that's the kind of long pole in the tent, right? You got to get those things over that hump before I'm sure the money would say, okay, here's the money. That's right. Right? That's right. Been a massive one of those. So what's been the delay, or has there been a delay, or this is what you expected time-wise? No, this is really what we expected. Okay. We've been very diligent in terms of systematically de-risking the project, and these things, they all have their own timeline, but it all seems to be coming together currently. So we're looking forward to sharing a lot of information here in the near future. Okay, so talk to me about recoveries, because there's a bit of historic data. Yeah. You've been doing some network yourself, and what's your expectation around that? Yeah, I think you're right. I mean, it's important for people to understand that this mine has a 9-year operating history, and we have a ton of operating data. So you might wonder, well, why are these guys doing metallurgical test work? Why are they doing all these things? It's not that we don't trust or believe in the historic data. It's there, and it's very useful. But we're coming into this project with eyes wide open. We want to understand everything we can about it. And so hence we're doing a lot of work that might seem repetitive, because you could just look in the past and learn. But one of the things we've done, and this is all driven by our very successful drill program, is that we've outlined a couple of new ore bodies that never have fed the mill in the past. And because of that, we're doing the requisite metallurgical test work that you would want to see people do to understand exactly how this ore is going to go through the mill. What is it going to provide in terms of opportunities for cash flow? So it's really driven by our successful drill program that we're doing a lot of this work.
Okay.
Yeah.
Like I said earlier, the project itself it's okay, but it's of a certain size, right? It's not going to set the world alight, but you've done it at speed. You've proved you can do it, and that's a nice start. It will throw off some money, lovely. Question I'd be asking is, what are you going to do with that money, right? So we reference maybe going and find similar projects in the area, in the district. Right. So let's come back to what that could look like. Quite distressed market at the moment for everyone, not just mining, everyone. There may be probably more opportunities as a result. So again, the conversations you're having, the type of money that you're having, type of money from the providers that you're talking to, does that give you access to capital for M&A activity? Do you need to use cash in this environment? How do you envisage the future looking? Because that's where the growth story is. That's what I'm interested in.
Yeah. BMR, our goal, you're absolutely right, is to use the Punataki mine as a launching point for the company. And we feel that we have an amazing amount of opportunities to scale the company right there in Chile. We've been very active down there since we've visited now a few times since the borders open, getting to know the people and the players in the marketplace. And we find ourselves in this, in Chile, you have small, medium, and large mining. It's that simple. And we're in the medium size range, which is from maybe 4,000 tons of copper all the way up to about 40,000. And there's just an amazing amount of opportunity there for us to potentially just repeat what we're doing at Punataki. And as you say, this isn't a giant mine. It's not a huge thing in terms of the world of copper production. But for us, it is a very meaningful thing because we're going from zero to 25 million pounds. And if you think about that, we get Punataki operating and we do it successfully, which, by the way, is job one. But you're asking about the future, so we'll talk about that. We're thinking a lot about it. And if we can go and we have visibility on a lot of projects, which could double our production within about 18 months to 24 months. Okay. So going from 0 to 25 and then again another 25, that's a meaningful step change for a company like ours.
It is, but it's a big step.
It's a big step.
Because you don't know where that is or what it is at the moment, right? So I think that's my point is like, if you've got all the stepping stones in place, you've done things at a pace, that's great. And it's a question of how quickly do you think you can move forward with that kind of growth story, find the next asset, negotiate the next asset, find the money or structure, some way of acquiring or optioning it. Yeah. It's going to be tough because there's a bit of competition out there.
Well, no, there is, but the great part about working in and looking in this medium-sized market, it's below the radar of the majors, and it's just it's a very large segment of the mining industry in Chile. So
is that the edge? The fact that it's because it's like most people go, okay, give me a project, I'll scale it up, brilliant, nice and easy. The harder one is doing, as you say, maybe piecing together a bunch of satellite projects and coming together, but there's less competition.
I think there is, and a lot of these operations, most of them are privately owned, and so they're not out there. It's a different dynamic, right? And the majors aren't looking at a 25 million pound. It wouldn't make a difference to them, so they're not wasting their time. So, for us, we've always viewed Punataki as a launching point, and the value that it's going to bring to the company is something that we can leverage in the future to do transactions to scale the company, and that's really what it's about. And along the way, we're finding healthy partners that would probably enjoy to be a part of that whole story in terms of providing capital. But it's really the value of the company that we would leverage, and the value is going to be created by Punataki.
Okay. Given the market's really tricky at the moment, people are looking for catalysts everywhere. So for your shareholders and anyone looking in new to this, what next 6 months, what are you delivering?
That's a great question, because as I was saying earlier, all of these things are coming together almost at the same time. And so the next 6 months for us are going to be very busy and very important. We have a number of catalysts coming at us. And I think probably the two things that people are most interested in, one is what kind of a resource base do we have in front of us that would justify the investment.
The timing for that would be what?
That's in the next 6 weeks.
Okay, brilliant. Okay. What else we got on the list?
So that's coming up. And then the clarity on how we're going to fund this into production. And that's all coming together.
Okay.
So it's coming very soon.
You can't tell me about it yet, right? But you are in discussion.
That's right.
Okay, discussions.
Yeah. Discussions. We're approaching this on 3 different fronts, as I said, the off-takers, private debt markets, and also royalty companies.
Right. So you got those two things. Anything else? I know that's what people are wanting to know about. What do you think they should want to know about? Is that what's important? I think what's important for shareholders is getting clarity on the resources, getting clarity on how we're going to fund it, and what the timeline to production is. Okay. And our view right now is, because of the brownfield nature of the project and the close look we've had at it for the last 12 months, in order for us to be producing new tons through the mill, the existing mill, and everybody needs to understand this is a brownfield site. So all of the infrastructure that you would imagine that a mine needs is there. So this gives us an opportunity to be back into cash flowing within 6 to 9 months once we start allocating capital. Okay, and we can't have a conversation about a company with Chilean assets without talking about Chile and what is going on there. Yeah, you gave me a great answer last time. What's changed? I think we've gotten a little more clarity on the whole situation. Okay. And of course, please share, because there's a lot of confusion out there. There is. When the new parliament came in, and then shortly after that, the new president, there was a lot of promises made to people in terms of social programs and this and that, and that's what got people elected, supposedly. So now they're trying to figure out how they're going to fund all these promises, and we've heard things about 75% royalties on copper and whatnot, and that was in the early days. And I think now that the people have been in government and they understand a little bit more about suppose some of these promises that they made, and they're getting a view on how they can fund things. They're realizing that Chile has a very important part of their sector, which is copper production, and they really don't want to shoot themselves in the foot. So they've tempered their promises in terms of how they're going to fund things. As I said, there is some crazy numbers coming out in terms of royalties that they're going to impose on people. So in the last sort of 8 months since they've been in there, and they've interacted with industry and whatnot, I think they've tempered what people thought they were going to do, and it looks like what the plan is to fund these programs is they're going to levy some royalties on the copper industry, but it's really going to be in that large segment of copper production. As I said, we're in the medium size. You're talking producers, obviously, here. Producers, right? Yeah. Of which you will be one. But do you think you'll be exempt from that in some way, shape? Well, that's what I'm saying is it seems like they're targeting the large producers because and they've come out and give some indication in that way that it's only really the people that produce more than about 40,000 tons of copper a year that they're going to levy royalties on. And we're well within that. At 25 million pounds, we're at about 10,000 tons. So we actually have room to grow. And if there's any kind of royalties, it'll be very minor. It'll be on a scale system. Okay. So I guess we've seen the things being tempered a little bit, and we've got a lot more clarity on what they're trying to go for. Yeah. Also back home, so the cease trading note. What's the update? So we thought we were doing a really good thing by changing auditors. Right. Everything we're doing is in preparation of going into production. Yeah. And we went from a very good but smallish auditor, which we've been with for several years, to another Big Four auditor, thinking that it's a great idea, and hopefully at the end of the day we'll realize it was. In order for us to sort of transform the company and be prepared for becoming a cash flowing entity
in another country, and the big four auditing firms have so many more resources for tax advice and all kinds of things. Having said that, right now, people are looking at me and saying, why did you do that? Because a lot of times when you change auditors, they don't necessarily agree with what the prior auditor did or how they interpreted rules. And we found ourselves in a situation that they disagreed with a lot of different things, mostly to do with the operating entity that we have within our company and how we rolled that into our company. These are all just interpretations of various accounting rules, but a different interpretation from the prior auditor, and it's caused us to delay filing our year-end financials. Now, having said that, the story just goes on because there's a lot of people that are late in filing, and the regulators in British Columbia were so overwhelmed with late filing requests and things like that that they didn't have the personnel or the bandwidth to really investigate all of the applications for late filing, so they're defaulting to cease trading. So, it's really unfortunate that we're in that situation, but it's all driven by just different interpretations of rules.
When was the resolution, I guess? When do you actually submit? When does that go away?
Well, I think we've now gotten to the point where we're finished answering the questions and giving clarity on different things, and the auditors are finished interpreting the rules and applying them to our situation. I feel like we should be filing this week.
Okay.
And so
it doesn't affect business. I just want to understand what's going on there. It doesn't affect business, but it's got to be some closure to that.
Yeah.
Sounds like it's in hand.
It's in hand.
Okay,
Yeah.
perfect. Look, thanks for coming in.
Yeah.
Glad you've enjoyed the past couple of days at
thank
the
you
old
very
conference there. Good to see you face to face.
Yeah, it's really good.
Of course.
It's great to be in London and see that everything's very active and busy here. And that's what we
No
want to see.
masks anywhere.
That's right. That's
right.
right. It's very good.
Like normal life. Okay, we'll see you soon.
Yep. Thank you very much.